Hello again, this is the screen record for 729. Right now we had obviously a really bearish candle for the S&P 500 with this basically sell off and then testing this trend line here. It's right before the Fed with tomorrow with, I'm not exactly sure what it is. All I know is that it's some Fed related news, but we have this somewhat of a top here. And we're kind of doing an upward wedge. If we were to break these lows, I would consider this bearish. The 196.86 or 68 mark, I would consider that to be bearish. But the thing is that I'm not necessarily looking to take anything short, just because of all of these dips here, or all of these areas of support that somebody could be looking to potentially buy on. And I mean, you don't know what people are looking for. You don't know what funds are looking for, what other people are looking for, and everybody could be taking one of these, or one of those. And it's something that I see if you take this short, it's gonna be a choppy ride because people are buying on many levels. Actually, here's another level too. This is an area of basically resistance that somebody could buy on. So what I'm saying is that even though this might be bearish tomorrow after the Fed, I mean, this is just, it's going to be a brutal swing down. And I know that the indicators are saying that the Bollinger Bands are tight. I know you could see that on the daily time frame, that these are really, really tight. All throughout all of last year, all the way to October of 2012. But I mean, so the market's got to pick a direction here, and I'm not really looking to short this. I mean, this is a nice uptrend that we have. We're testing this area, and we could go down, we could test this, and get some room, and then we could shoot up. The thing is that if you're sitting in cash while the market's going down, you're technically coming out ahead, because once the market regains everything, is that you have technically more buying power than what you came in with. So it could really go either way, and it's something that I'm not really looking to do anything with right now. NASDAQ, I mean, the NASDAQ didn't even touch the trend line. I mean, I'm just getting so many different mixed signals from all of these, all of the indices, that they're all telling me, a different story. This doesn't look bearish at all. I mean, this, retested that high and just kind of settled, like, without testing that low. I mean, that looks fine. And also too, it's holding this kind of breakout area. I mean, this one's just kind of saying, do nothing. I mean, just wait for it to pick a side and go play it. Here's what's I'm really confused about today's action. We had basically this kind of, one could argue that this is a start of an Elliott wave with the cup here, but I mean, if this was really truly bearish, it would have tested this today on the S&P going down, and that's just really weird in my mind. So I'm almost of the opinion of is that I'm getting so many different signals that the best thing to do is just sit in cash, and that's what I'm going to do. So I'm going to sit in cash, wait for a side to pick what it wants to do, then go ahead and play it. Couple names. Well, I really don't have much in terms of the trades that I'll review Priceline here. I took Priceline today. I was actually up on this one. It's first winning trade in a while. I wasn't up much because I ended up taking a break-even stop on most of the position here. But we have the 5-minute open range break above this support and resistance area. So you see the 5-minute trigger, and you have it above this area that I was talking about. So you have the break above, 5-minute open range break. I changed my stop ups or my stops to the 382 fib of or the 382 of the daily average true range. That was around like $7. So I take that. There's absolutely no way I'm gonna put my stop down there. So then I just split the difference, put it around here initially, and got it. And that's what I used to calculate my risk reward. So it's like a $5 stop. So my overall target was 112 or 1264. I mean, that obviously didn't hit, but it is what it is. If you go to the initial risk reward of the trade, it's a 4-to-1 trade. Ideally, you'd want it about between 3 and 4 with where your initial stop is. So I took this. I got out at 1-to-1. Oh shoot, hold on. Yeah, this was 142-ish, 42.5. That's where I had it. So I'm at a 3.5. So then I took this off at when it was one. I took a quarter or a third off at 1-to-1. Excuse me. Let me just figure out where exactly I took it off. I can't really remember off the top of my head right now. So we got 22. So we got $11 from here. Yeah, so I took it off. I took it off pretty quick. So yeah, I took it off into that spike up here. And then I set my stops to break even. Then I got stopped out for a little under break even on the main position, the other 2/3 of it. So it was slightly profitable, and it wasn't a bad trade considering this overall market and how the rest of the market went down. I know I told you guys about Apple yesterday, how I got chopped around and how I changed my rules so that I was allowed to stay in that trade. I would have ended up getting stopped out here on that break low. So really no harm, no foul. It's something that I wouldn't have made much money on. So I'm just thankful that excuse me, I would have got stopped out on this break of the 30-minute. Or wait, no, hold on, excuse me. I would have got stopped out here on the break of the 30-minute open range low. So it's something that I wouldn't have made profit on, but I would have made some profit on. I'm just thankful that it wouldn't have been a huge trade that you'd be talking about several like a few months from now, like the Tesla or something like that. So I'm just thankful of that. Setups for tomorrow I'm looking at would be IBM. I mean, this is looking really solid from a daily time frame. How you're basically getting multiple tests of this 196 area. I mean, if it breaks that, it should keep going to 200 without a doubt. I know Twitter had a good earnings release today. That's something to watch. What is it, like 52 or something right now? Just 50. I mean, that's just great. That puts it around here. I mean, this thing has a ton, and I mean a ton of room to run. You're talking about a price range of, you can have over, this thing can go up over 100%. From where it is right now, and that's something that if you hit it right, like this thing is gone. And so this is something that I'm, this could be a huge winner for us this quarter until the next earnings release. So I'm going to be watching this thing like a hawk. A lot of people are going to want to get back in, and it's it looks relatively cheap to what it used to be. So this is one that I'm not going to play it right now, but I'm just watching this one so closely. I mean, the other things that are looking good right now are the bios. GoPro. GoPro is looking good too. If you take a look at this, and I've been talking about this level for a while now, this 50 or 45 area, excuse me, how you basically have a head and shoulders here, and how the break above could push this up And what I'm seeing right now is that there might be some fear of missing out with the GoPro because they've got earnings coming up in a few days. That there might be people trying to force this trade. I know my original target was the 50 area. I would probably lower that target based off of the time frame involved and how things don't like to truly break out before earnings. So I would be looking at, let me pull up the fib here. Now I'd be looking at this 47 area as a potential target. So I mean, you're doing it for $2. You put a 50 to a 60 cent stop on there, and it's a good risk to reward trade in my opinion. Along with the support of the chart following you. So that's kind of what I'm watching. I mean, I don't really have much for tomorrow. It's just kind of a Fed play, and just play relative strength and relative weakness at that point once the Fed happens. I know what the last time it was Facebook. Let's see if this daily pulls up. And it's something that produced a good 30 to 40% on weekly options. It was what day was it? I'm trying to remember. It was a defined couple of days of top. That wasn't it. It was right here. As you got these top from the first 3 days, it was showing relative strength the entire day, and then you could just go ahead and play off of that. I mean, you're talking about a 5 to, I mean, you get a 50, 60 cent move on something intraday, like right after the Fed. You can go in pretty cheap options. I mean, you could easily get 100%. So what I'm saying is that, you can basically come into the Fed unprepared and then just play relative strength and relative weakness out of, basically the stocks that, have good spreads and go ahead and play those. So that's what my plan is for tomorrow. And, we'll see where it takes us. If IBM goes, I'm probably going to take that. Oh, Goldman Sachs too. Excuse me, I just remembered this off the top of my head. This one's flagging, as you can tell. You get this nice run up after a yard. It's flagging. I've been talking about 180 for a while on the weekly. I mean, so it should tap that, and then if obviously the monthly is really supporting an Elliott wave breakout here, how you have this breakout area, and then kind of the flag into it right now. We break above, this thing can go higher, but what I'm saying is that if it breaks this flag, you're looking at the 181s. So that's what I have for the upcoming trading session tomorrow. And I look forward to see what happens with this market. It's tight, and it's going to get interesting soon. That's all I got. So thanks again for watching, and like the video.